These were the trades from yesterday that I had planned, and unfortunately, I had a really busy day yesterday, so I didn't take any of them. But yeah, well, they don't look too bad, huh, in hindsight. You think about the idea that I had. Um, in hindsight, they look pretty good. So I had such a busy day yesterday. I didn't wasn't even looking at the charts, and so if I'm not 100% focused, I'm not going to take a trade. And yeah, but yeah, it doesn't look too bad. So I think that's a good. It's a good confirmation because um, I did say it was range bound, and it's range bound. It is range bound. Let me get rid of them now. So how to take a trade now on Bitcoin? That's the question. Now let's have a look at the daily candles, and then let's have a look at the weekly candle to see what's in play right now. Let's just have a look at the higher time frame candles first. So we're halfway through the 3-day candle. The week candle closes tomorrow, which is looking like it could probably end up either as a red doji, or if it comes up, it could be a green doji. Potentially, we have to see how it closes tomorrow. I think red would be better, personally, because red signifies that the bears are in control, and like if it was to end right now, the way we look at it now, I think that would be a bullish candle, simply because red candles means the bears are in control because they were able to close lower, but then you would have decreasing volume and they weren't able to close lower than the previous week low, which is their target. So the theory is that bulls are trying to close higher than the previous week high, previous candle high, and the bears are trying to close lower than the previous candle low. And it's a constant game, so to speak. It's a constant repetition of bulls versus bears trying to close the price either higher or lower. And it's all about the close, really. It's not about how far the price gets. So at the moment, it looks like the bears aren't successful. And then when you look at how far the price got down, they weren't actually able to take the liquidity from this wick. You see, just by a fraction, it looks as though they failed. So even though most people would prefer, like most traders would prefer the liquidity to be taken, if it's not taken, that signifies strength on behalf of the bulls. Yeah, because the bulls were able to defend their low to prevent the price going lower. Doesn't mean it won't be taken in the future. So just because it's been defended in one candle, potentially, there's no reflection on the future. It could go down and take that liquidity, and ideally in the best case scenario, whatever happens in this range in the future, and we don't know how long this range is going to go for, but honestly the best case scenario before we go up is to clear the liquidity. You want the liquidity cleared. Yeah, if the liquidity is cleared and the price goes up, that's better, because you're clearing all those leveraged longs. The price is still going up. Yeah, when you clear leveraged longs, they all sell, because their stop losses are market sells. So when you have so many longs market selling and the price still goes up, that's bullish. So it's an indication of bullish behavior for the liquidity at the lows to be taken and for the price to continue going up. So you kind of want that to happen before the price ever continues to go up in the future. So we'll be looking out for that. I mean, look at that. That's like a real, look at that. Basically, you see what happened here, and just to understand the dynamics of what's going on. In this red candle push in this hour, there's a lot of volume. See that? A lot of volume. And then what happened was a lot of these shorts, basically in these two candles, a lot of shorts got trapped. And I'll show you actually, because it's interesting, because I was looking at this on Exo afterwards, not while it was happening because I was busy, but I was looking at it on Exo, and for most, this is basically Chinese to most people, like Japanese, like you can't read this. This is like, what the fuck is this shit? And when I first started looking at this, I was exactly the same way. I was like, what the hell is this bullshit? I can't understand this. And obviously I still don't understand it. I do understand some things, right? So firstly, yesterday I was talking about bearish divergences on the CVD, which obviously played out because the price was over here and the CVD was going up, but the price was going, technically the price was going down because it was making lower highs. And obviously look at that, it did play out. So you have to be very careful when it comes to the bearish and the bullish CVD on exo charts. I've learned that if it's telling you bearish CVD, you don't long. You could short actually. And I was almost looking for a short yesterday, but I don't like shorting the lows. I want to short the highs, you know, so I'm not just going to chase the short unless it's a planned short. But anyway, by the by, when you look at this, obviously it's giving you a lot of information, but in a gist, that's the way the price has moved yesterday. And this is a 5-minute time frame, so each one of these bars, even though they look really messy, are 5-minute bars. This is the open interest. Basically, it's telling you whether people are taking loans to take leveraged longs or shorts. So as if it's going down, it means leverage is closing, and if you get this like blue bar like that, it means leverage is opening, so the new leverage is being taken. And then obviously you've got the CVD, which signifies market orders. So market orders are not limit orders. It's market orders are when someone is filling their order at whatever price, the market price, and that's the kind of order which pushes the market orders. Limit orders don't move the market. It's the market orders that push the market. You have to understand these ideas, because once you understand these ideas, it helps you to make trades and plan for trades and understand why things happen. The why is so important. I think when you understand the why, it will help a lot. But anyway, what the first thing you notice as I zoom in on yesterday evening's low is these liquidation bubbles. You see this bubble here? This button, the bigger they get, the more liquidations you get. Yeah. So basically on this whole down move, there was a lot of liquidations, and then you get this massive liquidation event. See that? That's a big liquidation event. So that's the first signal that you're looking for on exo charts for a reversal. And if I go back into price history, you see when you get these liquidation events, these bubbles, sooner or later the price reverses. Not always, but sooner or later. Not always. Okay. So it's a higher probability to see liquidation. So you see the liquidations, that's number one. And then the other indication in hindsight is when you look at this, these are 5-minute candles. Basically, this is the candle of interest. And then it basically, you see that the OI went up, the open interest went up by 6.7 million. And you had 8.2 million longs come in in a 10 million candle. So massive longs, massive amount of longs in comparison to the average, the aggregate. Yeah. So in comparison to the shorts, here you can see it's minus 2.7 million, minus 3 million, minus 2.7 million, minus 3 million, minus 2 million shorts, but you had this crazy long. So it was a big long, and the long was a leverage long. It was a big long, right? That's your second indication when you're looking at a reversal on XO. And then obviously the third indication is to see how the shorts were trapped, right? So basically what you're experiencing here, what you're seeing is people are shorting, and the way you can tell that people are shorting is the price is going down, the OI is going up here and here, and obviously here you can see the OI is going up and the price is going down. So people are shorting into the lows. This was the liquidation event. So this is where the longs were liquidated. There were some liquidations here, but ultimately what happens is when the price comes up the second time in this candle, yeah, you can see that the OI goes down, the price goes up. So basically that means that some shorts closed out. So you can not only are you seeing an injection of longs, you're also seeing now that shorts are closing. Yeah, so there's a second indication. And what's more, the price is now closing above this low area, and then you get another injection of longs coming in here. And what happens is that suddenly all of these shorts at the lows get trapped. They're called trap shorts, and that causes a lot of shorts to start closing their positions at market, because that's the only way they can fill. And so you see on this candle here, you have a 3 million longs, 7 million candle, and the other indicator, and it's hard to see, but you'll get this in the future, is you can see lots of, you see these like black rectangular numbers. That means that orders weren't filled. So it means the price slipped. And when the price slips, that means that's a good sign, because it means you don't have people shorting. It can't fill, so the price slips. And that's kind of what you want to see when you have to zoom into that. There was a lot of things that were telling you in EXO that this was the reversal, and obviously it just exploded. But I think the key indicator for me when you're looking at EXO was this candle here, this 8.2 million longs with increasing OI after a liquidation event. And that's basically what happened. Someone saw that all these longs were liquidated, they just longed basically, and the rest is history. The rest is history. And here the shorts here were liquidated on this liquidation bubble, and then obviously the price started to slow down, and now the price is just going sideways. All right, so this is interesting. Coming up to current price action, to the current price action that we're looking at, when you're looking at this, you see this CVD goes down crazy like that. Yeah, that's a market sell. Yeah, it's a market sell. That's quite a large one actually. Let me see where it corresponds to on these. That's a short, you see that? So that's a minus 5.8 million with increasing OI of 4.5 million. So someone's taken a big short, a couple of big shorts here. So someone has shorted this. Now, the way to tell if there's the way to tell that if there's bearish bullish absorption, I'll tell you. So there is actually, you can see that this is actually quite bullish, and the reason why it's bullish is because the CVD goes down below these lows here. Over here you see the CVD made a low, but the price in that moment here didn't actually make a low on the price. So effectively what this is saying is that just shorts were absorbed, and you can see on the OI that the OI goes up. So these are actually big shorts in play, and the shorts are being absorbed. So what we're experiencing now is a little bit of bullish divergence, and that's kind of what you want, because you know that there are limit longs, there are limit buys, big ones on the market. So all of these shorts are being absorbed. So they're shorting and the price isn't moving down. That's basically what's saying. They're shorting at market. This is all market, and the price isn't going down. They're being absorbed by bigger longs, but they're spot longs. And if eventually you'll get exhaustion of the shorts, you get exhaustion of the sellers, and then the price will move up. And then what happens is these shorts here, if the price gets above here, above the daily open, these shorts are going to market close. So they're going to market close. So they're market longing. And that's what that's going to push the price up. Yeah, that's going to push the price up. And that's kind of where you want to be. You want to be in this kind of position with a long when that happens, because suddenly you get to move up. So this is actually quite bullish. So I think because of what I'm seeing here, I think maybe when you go back to Bitcoin, you'll be looking for a long right now. Maybe you're looking for a long. So let's have a look for longs. Let's see what we get. So it's good to have a look at EXO and try and gather what it's saying behind the scenes, and then we can plan for longs. Obviously you're going to long because these candles are off the charts. Look at these, high volume. Yeah, we're kind of consolidating above these highs now, as you can see there. That's pretty bullish. So yeah, I mean, this is a good position to long, really. Where's your invalidation? That's the hard part, because naturally there's no invalidation closer to the price action right now. You'd have to put your invalidation there. Yeah, and that's quite a distance. So what you're trying to do now, what we're trying to do is find a closer invalidation. That's what we're trying to do now. That's the objective. We're going to take a long here. Technically that's your invalidation. So to make this long profitable, not profitable, but justifiable in terms of the risk, you need to, at the very least, you need to get 1-to-1 at the very least, because that means that 50% of your trades have to be right. At the very least, you need a 1-to-1 on this kind of trade. And then obviously you're not going to risk more than maybe 1% or even 0.5%. And so you'd have to go into this tool, enter in your risk amount. Don't know if people have used this before, but it's very good. And you enter your account size, whatever, say $300, and it will tell you, should tell you it should tell you the quantity of trades, 0.01. That's your trade. So you're technically you're meant to enter 0.001 BTC. That's your long, and then you're only risking 0.5% of a $300 account, and you would set your target, and that would be your stop loss, and that's your trade. And that's just by using this tool, which is really good. So definitely if you change that to 1%, see it says 0.002 Bitcoin, and obviously depending on your account size, you can change that to whatever. Let's say your account size is $15,000 and you want to risk 1%, then this will tell you that your quantity of Bitcoin that you're longing with is 0.109 Bitcoin. That's your long. That's how much Bitcoin you're buying. And then with this kind of stop loss, which would be a 1% risk, and then that would be basically a 1-to-1 trade. So for a 1-to-1 trade, you need a 50% or more success rate to be a profitable trader with this kind of trade. Yeah. And obviously if you go up to this, if you can do this, then you only have to be successful over 33% of the time to be a successful trader. So trading is all about consistency. You know, it's all about being consistent and taking the best trades. But I think the stop is too far personally, unless there's a higher time. Like when you're charting on the 1 hour chart, yeah, it's too risky. If this was like a day trade, you know, like a daily, if I'm charting on the daily chart, and then it could make sense, because then I'm saying, well, yeah, that is my stop loss there, these lows, and actually now I'm targeting up there, or at the very least, you know, then you'll be targeting the golden pocket to there. That would be your target. And so that would make more sense, because you're risking 1 and your reward is 2.69 just from this current position. Yeah. And then if you want to, and this is the other strategy that someone could use, and so you do exactly the same thing. You put your account size in USD, whatever, who knows, $2,000, and it will tell you, it gives you all the information. You're risking 0.014 Bitcoin. That's your buy. You buy that much Bitcoin at this price. This is your stop loss, and then your risk versus reward is a 2.69. Tells you the targets and everything. It's really good. So I think I mean, the way to really do it is to scale in, is to ladder in. And so you wouldn't necessarily come in this kind of trade, you wouldn't necessarily come in with a full position. What you'd probably be looking to do is come in with like half a position or something. And then if the price does move up, then you can add the rest. You can add the next half, and your aggregate, your average position will be halfway. If you have half there and you do get stopped out, then you're only getting stopped out with half a position. Or if it goes down, you could add the rest, you can add the other half, and so your average actually is lower down here. But obviously if that happened, as it comes back up, you'd have to take that half back out. Yeah, because otherwise it could come back and form resistance off that neckline and continue. So you have to be careful with that situation as well. It's never good to increase your position when you see weakness. It's always good to increase your position when you see strength. It's always adding to strength is the way. Never add to weakness. That is not a good plan. It's a terrible plan. Right. So maybe that was a bit useful. This is looking quite good. I really like this actually. This is nice price action. You've got bullish CVD. I kind of wouldn't mind taking these lows, but you know, that I think that would be the best trade. If you really want an amazing trade, let's take these lows. Let's FP these lows and let's go up. You know. Something like that. That would be a really good trade. If that happens, that would be amazing. Nice SFP of these lows. Go long. And the reason why you would take an SFP is because if anyone is in a short, they will take profit once these lows are taken. You want that. And they will be taking profit market. It'll be market profit. So they'll be taking market longs to take profit. Even if the short wanted to close their position, that will be their first opportunity to close their position without taking a loss. If someone's in a short now and they're not happy with the price action, yeah, rather than just closing now, the only options they would have is to limit out, or to wait for this first opportunity would be some kind of local SFP before they did that. So actually you're buying with the turning of the price, where shorts are potentially closing their positions, and then obviously as the SFP happens, you're going to have new market longs open as well, because I think people are looking to long right now, and that would be the entry. An SFP of this low would potentially be the entry, I think. So I'd be quite interested in this this long right now. That would be quite interesting. The problem with this move up is it's so impulsive that if for some reason we do lose this line and we do go down and we form resistance off that neckline that we just broke, then I do expect the price to go down much deeper. Yeah, and naturally I think, I mean, in that case you could short that too, but I think because the CVD is showing bullish CVD, I'd be very cautious. I'd prefer for a long in the lows or here and with an SFP. But if it was to go down, I suspect that this line that I have, this previous SFP line, will be a good position to long. So let me just draw that as well. Actually, the golden pocket is coming a little bit higher. So where does that level come to? Let me just do the log on. I hate the price. I should get rid of them actually. That makes some difference. So that's a 786. Yeah, I think I'd love to kind of, I think in my mind, I'd wait. This would be better here, a back test of that level, and then you target this level there. So if you had if it dropped, then maybe that's what you'd be looking for, something like that. That would be your trade. That's the SFP. This is if it dropped. And then obviously the other thing you could do is short if you lost this level on the back test. But I mean, again, I said that I don't know if I would be shorting with bullish CVD in play, but technically that would be the correct opportunity for a short. You let it break down, you get the back test of this neckline that it's broken. If it shows a reaction, you have an invalidation. Now you take the short, and obviously if the price continues to go up, then you're stopped out, you're back into long mode, you know, because that would actually be a sign of strength. To lose a neckline, to reclaim the neckline, is a sign of strength. Then you can go back into long mode. Yeah, so there is a definitive line here, where if the price is going underneath this line, then you're looking for shorts, and if the price is holding the line, then you're looking for longs. That's kind of the situation that you're looking at. Good morning, Maxine. How are you? You're the only one watching. That's fine. But what I'm going to do is I'm going to put this in a little recording and then just chuck it up, so people, if they want their BTC update, they can have it. I'm actually, just for the sake of myself, because I wouldn't mind taking this trade, this SFP trades, I'm going to set an alert right now. Long SFP. And then I'm going to do the same thing here. This one I'm going to call it long spot. Looking for two longs there, and I'm not going to short, because I said, because of the CVD, I'm not interested in shorts right now. I like this reaction It's very strong. So potentially I'd be thinking that's something that I would be interested into longing with that momentum push. Did I not have a trend line? Okay, yeah, see. So I had this line from before. Maxine, do you trade Bitcoin? Are you interested in Bitcoin? What's your interests? I had this this trend line from that top to this to here, and actually it looks as though we're above it. No. See? It kind of held as resistance there, and now it kind of held as support. So there is a possibility. So that would be nicer down the Sunday, down, I don't know. We have to see how this plays out, but these are all possible. SFP, huh? All right. I think that's it. Oh, I didn't do a volume range as well. Let me just quickly do a volume pool and just have a look at that and see if that's telling me anything. I'm going to have to delete all these drawings again soon. Trades today. What's this? I'll put that there. Wait, no. Oh yeah, hodl, yeah. Maxine says, I'm not a fan about trading. I prefer to hodl. Yeah. I trade for fun. I don't trade for a living. You know, for me, the trading style that I have is long-term trading. You know, like cyclical trading. I'm not interested in day trading or whatever. I think it takes a lot of time, and you have to have nerves of steel, and you have to be 100% focused to trade. I don't think it's a good idea to trade if you haven't got that kind of mentality, and it is nerve-wracking as well, trading, you know, because you have to be prepared to accept lots of losses. I think with like higher time frame trading or cyclical trading, you don't have that same kind of emotional roller coaster, because the idea is very simple, you know, just dollar cost average in the lows and then basically dollar cost average out of the highs. Effectively, that's higher time frame trading, and you're not too fussed about the fluctuations on a week-to-week basis. You're not looking at the 30-minute candles and going, shit, my investment's going to nothing or it's going to the moon. You're not really focused on that. So, and obviously if anyone is hodling Bitcoin,